Welcome to another trade breakdown in our pursuit to pass this funded challenge. So I've got this 100k funded challenge, and as you can see, this was last week, and then this week again we've had all green days, and I'm going to do a recap of the trades just now. But you'll notice here that last week we had really good wins, and this week we never. There's good reason for this. So my head wasn't completely in the game this week. I wasn't totally dialed in. My mother-in-law, who was living with us for 6 months, went back to the Philippines. So we travelled down to the airport the night before, and a day travelling back, and a day preparing everything. So that's why I never traded this day. I think on the Wednesday I was trading, but I closed my trade early because I was driving home. So a lot of these trades were done on a mobile device as well, and I thought I don't want to be in an active trade when I've got a 3-4 hour drive ahead of me. So I closed the trade, and yeah, I regretted it when I got home, but it is what it is. But yeah, so my head wasn't in the game, but I remained disciplined. I remained, very, very cautious and calculated, and only took what I seen as A plus setups. So it's something I wanted to address right off the start of the video. I had a message, I don't know if it was here or in some social platform, but the number of trades here, right? So see, when you see 6 trades, 5 trades, I will never ever ever take any more than 3 trades in a day. So to break it down, about 80% of the days I trade, it's one trade, and the other 20% is, mostly just 2 trades, or there's an occasion when I'll take a third trade in a day. So what these are, this is me scaling in and scaling out. So if I scale in at, let's say, VWAP, and then I scale in at another zone, and I scale out as well, it's recording each trade as a trade, when initially this was just basically one position. Okay, this as well, one position. It's just scaling in, scaling out. So let's come over to trading view, and we'll go over the trades. I'll just turn off all the indicators apart from sessions, and we'll come over to Monday the 10th of November. So very simple here. This was basically a London session here, and this must have been on a 30-minute. Oops. Yep. Here we go. So pre-market, there's been this kind of resistance zone here. We've come up over it. I've missed this, obviously. Just came back down, retested it, and then as it pushed away from it again, that's when I've entered. 2-to-1 trade this one, and this was on Monday, and you see break of resistance and a rejection wick. So you can see here, obviously I've not been paying attention at the charts during this zone here, but when I've came to the charts, maybe here at this candle here at 9:30, the previous candle had a big rejection wick off this zone, and we had broke through it here, closed above. Ideally I would have got in here, but I wasn't. You can't always be at the charts. Next candle we wick, next candle we try to push up, come back down, and then I enter here. So that's my entry there, and I get out here. And it could have been a much better trade. Like I could have got about a 5-to-1 there if I'd held it into the session. But 2-to-1, first trade of the week, off to a win. So this was the second trade that I took. I actually took this trade at the airport on a mobile phone. I was in a cafe, and I noticed on the 30-minute time frame, this resistance zone forming here. See this blue line here? If I just pull this across this way, it may be a bit better to see. So we're creating this resistance zone, broke through it. I entered this a bit early on the 15-minute time frame. You can see here we pushed through. I entered early. I think I scaled into this in 2 separate positions. So I would have entered early and then I entered when we broke through here. And this is where I got out the trade. Because I was travelling home and I didn't want to be stuck in a trade on the way home, looking at the phone, my kids in the car. I've got 2 young children. So I committed this trade and I was going to be travelling for 3 hours. Now, had I have stayed in this trade, would not have got stopped out. And look what happened. Just went parabolic. Could have got like a 15-1 trade there. They've been huge. But I got out of this trade and it wasn't even a 2-1. I think it was like a 1 point something. And I got out. But you live and you learn. And it could have quite easily went the opposite way and stopped me out. So, but yeah, it was very difficult to see when I seen this. I actually said to my wife it was her fault because she was the one that convinced me to close the trade. She seen me looking at my phone as we're walking to the car and asked me if I had a trade on. So I exit the trade and then this happens. So yeah, that was the second trade of the week. So that was on Wednesday. So we had a win on Monday, a win on Wednesday. We never traded on Tuesday. So that took us to Thursday. So on Thursday, I've never really discussed this style on the channel before, but I noticed a big wick forming. So if we come over here, we're now in a 4-hour time frame, and it's basically a wick fill on the 4-hour candle. Okay, so see this candle here? So my trade was basically here, filling in this wick. It's hard to explain why I felt, because I just seen this going up, and I just, I just had a feeling that's hard to explain that this wick was going to get filled, and you can look, it get filled, and then it reversed down. So my entry was here, and my exit was here as this wick get filled, and you can see it was a great trade. And I say a great trade because I got out exactly at the right point. You can see here it just went above it, obviously a sweep, and it's came back down and started bearish. So another thing to point out in the charts, you'll see these boxes starting to appear. What these are is clean ranges. I'm now marking out the clean range. So if you look back here, if I pull this all the way here, this is a clean range. If you look here, this is another clean range. This is probably a good one to show. So what I'm saying is a clean range, right, is see how the candle goes up. So it breaks through this here, okay, and then it goes straight up. There's a little bit of noise here, so that's why the yellow box stops there. But from here, above this noise, and to here, below this noise, this is a clean range. It's very important to have these marked out in your charts. Look what happened when it came down into the clean range, right through it. Why did I not take this trade? It was at 6 PM at night, so obviously I wasn't in front of the charts. So, but look what happened when it came back in, right down. So I'll show you, before we go into the last trade of the week, I'll show you this marked up on the top step charts. So if we come to the 30-minute, you'll see this I'm calling a range, because if we pull it across, it's below here, because this is noise, this area here. Let's see if I can find get an arrow. So this area here is just noise. So this area here as well. But if I pull this across to here, there's just a clean drop. So when we come back into this range, there's no resistance, there's nothing here. It's just a clean down. So when it comes back up into this, you'll see it'll fill it. Not all the time, but it's something to be aware of. So let's come back to gold on TradingView and we'll go over our last two trades. So that was the wick fill on the 4 hour there. Just here you see we're going up, and then I just had a feeling that this is going to fill this wick. Wick fill, it happens time and time again, and only really through, being on the charts and having experience you will see it. So here's another entry. So this was today, we had 2 trades today. This one here broke through this area, and this was taken because I just seen it just plummeting. Just if you look at gold, it's just a huge downtrend here. Just since Thursday, it's just come all the way down. So this was during the session, during New York. This was at maybe about 1 PM my time. Broke through this area. So I entered here, stop loss was just above, and we get out at a 2 to 1. So I did take a second trade today. The reason I took it is my indicator that I've created, wick reversion. So this is basically taking a lot of things into account in the background, the ATR, the size of the wick compared to the body, the volume delta, how much volume is coming into the market, what kind of volume is it? Is it buying volume? Is the buying volume much more than the seller volume, producing a big positive delta number? That's what this is here. So I've seen this, okay, and I don't usually enter just on this alone. Today I did because I lowered my risk from what I won here. So regardless of what happened here, I would have ended the day green because I never risked all that I won. I risked half, so I'd have still ended the day green. So here I've seen these big wicks. It was just kind of hard to see when that indicator's on, but if we turn the indicator off, you can see all the wicks. One, and also big massive move down. Then we have a doji candle, okay, then we have another doji candle or a hammer, big wick, big wick, big wick, and then I see this. So I take a position because I'm just thinking this is going to reverse. It's definitely going to reverse. It's come down all day, so I'm anticipating something like this move here to happen, where we retrace back up slightly. And it's exactly what happened. I mean, if you look here, you never had the exhausted bearish candles. It just, went a couple of wicks and then bullish, 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 but it started to retrace. So similar thing here, but this time you could see with your own eyes big, massive, strong bearish candles, and then exhaustion, one big wick, 2 big wick, 3 big wicks, and then I get my indicator showing me that there's big volume coming into the market here. So this is a reversal. And when I say a reversal, it doesn't mean to say the whole trend's going to change. It means there's going to be a retracement, and that's all we need, a slight retracement. Look at it, there was plenty of a move here. And I think I get in and out just on this one candle alone. So that was the trades for this week. Again, we ended the week green. We wanted to actually pass the challenge this week because I think we were up £2,610 last week, all green days. And then this week we wanted, just a little bit more than that. We'd have probably passed our challenge, but it wasn't to be. Again, I wasn't fully dialed into the markets this week. I had a lot going on. I was very busy, family and stuff like this, so I was able to get a few trades, but as you can see, I never held them for reasons explained. So I also stayed out the market on Tuesday. This is very important when you're trading. We are programmed as human beings from a young age that we work 9 to 5 and we go out there, give our time, and in return we get paid a salary or an hourly rate. That's programmed into everyone. So automatically when we go to the charts and we are looking for an opportunity, and we're there for an hour, and then there's a second hour. We think we should be paid for that time, but you know, the market owes you nothing, and you need to be very smart and very calculated and know that there's going to be days where nothing shows up. You know, it's just not feeling good. Maybe the market structure doesn't look good. Opportunities just don't present. So then you don't just be a gambler and just place trades. Sit out. It's okay not to trade, but it's difficult as a beginner trader because you think that, you know, if you think you think you deserve to be paid for your time. You think you deserve an opportunity for your time, but no. I've had it before where there's been 3 days in a row and I've not took a trade because nothing has presented. And if I end a week like I did this week, up 851 when I thought I was going to be up 3,000, then I'm still up, so I can't be upset at that. Now this here as well, this is the model that we're going to trade live, what we traded this week. So when we're live, we're not going to be getting 800 and 1,000 and 600. It is not going to happen, because then you're risking, and this for example, if I had lost this trade, another 2 losses and I blow the account, it's a past account. I'm trading it and making money. So when I blow that account, it's back to the challenge again. So you want to protect that. Really protect your live account. So what I plan on doing is I'm not risking any more than $150 to $200 on a trade. That will be it. But I will have 10 accounts, 20 accounts, 30 accounts. So if you've got 30 accounts earning $150 to $200, that's £4,500 to £5,000 right there on one trade. You basically trade copy all your accounts. Trade copy all your accounts, risking $150. You would need to lose 15 trades in a row to blow the account. So that's the plan. And then further down the line, maybe into next year when we've got those accounts, we'll then introduce another smart model, rotating groups of accounts. And how that would work is, let's say you've got 3 or 4 groups. All you need to do is have one win, and then you don't trade on that group again, and that's you get a guaranteed payout. And then the other ones, you could even have losses on them, but you've still guaranteed yourself a payout. You just need one win on one group. So that's it for today. I will make another video next week, whether it's a green day, whether it's a red day, whether I pass the account or whether I blow the account. I will upload a video.